Hello there, traders. Welcome back to the TOGS Trading Podcast at number 34. Here we are, ladies and gentlemen. It's myself and my good friend Ian in Dublin there, here to give you insight into the real trading journey as opposed to the sort of some of the nonsense you see on social media. Thanks very much to those of you who have basically watched, subscribed. We had a few comments, we had a few emails about last week's session about back testing. Clearly, it's a subject of interest. We appreciate all the interaction and the follows and the questions and stuff. So thanks very much for that. If you have things you'd like to see us in the future, by all means, ping us an email, drop us a note and stuff, and we'll take that on board. But today, as I said, it's TOGS 34, and it's the penultimate one for 2024. And really what today is about talking about, is it worth trading during December? Okay, so we can expand on that and have a little conversation about that particular topic. So as always, looking good, Billy Ray. How are you doing?
I'm not feeling good. I'm full of the flu. A present for my son. It's the best thing about having young children is that they bring home these lovely bacteria or viruses or whatever it is. So I've been sneezing, and I'm just hopped up on drugs I bought in Germany for flu stuff because they're really good stuff over there. So I bought some anti-flu things and yeah. So it's it.
I thought you were just putting that husky voice on for our female viewers there and stuff. Sort of establishing yourself as the handsome hunk of the Tongs Trading Podcast.
It's what I do.
Not much competition, I have to say, but there you go.
It's what I do in a ring technical support and trade station in the US. It's like, hi, I'm from Ireland, and that tends to work out relatively well. But anyway, yeah.
Well, there you go. Listen, it's an edge. We're traders. We're always looking for an edge. All right, we're always looking for an edge. Find that and leverage it and scale it up as much as you can. So clearly you've had a bit of flu and stuff, but other than that, how have you been? What's been going on?
All right, there's nothing really that exciting. Nothing really particularly exciting because I've been sick basically since Monday. So it's not. I haven't really been. Well, on Monday, what ended up happening, which is I never know it in advance, but I always can't focus one day, and then and that was Monday, and then the next day I tend to wake up and I have the flu, and that was basically it. So I sat in there and tried to do some stuff yesterday and today, which is very rare for me. I don't think I'm going to even attempt to trade. I'm going to go to bed for an hour after I finish this, and then I'm going to maybe do some research, and then I have to pick up a bunch of kids from school. So that'll be my day. So it's and that's the worst thing about trading. And a day like today, I would have just called in sick if I was working back in banking or something. Mm-hmm. Where in trading, I will not get paid today.
No, that's the thing.
I'll look at anything, and I just did a load of. I mean, times like this are generally quite handy as well because you usually have loads of admin you can catch up on, and so that's what I've been doing basically for the last 3 days. That was it. Nothing much else really going on.
There you go. That kind of leads very nicely, without even trying. That has by kind of you set us up there nicely for the main topic for today, which is all about, is it worth trading during December? All right. So, what are your own thoughts on that, Ian? Where do you come from in that?
Well, it's kind of a game of two halves, really, isn't it? When you think about it, because I mean, you have the markets are just being markets. They're quite happy. They follow and there's okay volatility. It's not brilliant at the moment, but it's okay, and it's it's business as usual. There isn't on the 4th here. We're here on the 4th of December. There really isn't. It could be November or it could be August. You wouldn't really know the difference to it. Of course, that all changes as you go into the later parts of December, where you have a lot of traders are just not going to be working, and then the volatility drops off, and then you have a low volume environment, and then you have then all sorts of things can happen in low volume environments, because there's two things that in my impression tend to happen in low volume environments. One is that nothing happens, or else somebody pulls a fast one and moves the market tremendously in one direction, because they can do it cheaply. They don't need to use as much money to push the market to some area. So So I'll be trading up till probably nearly the 28th, social time like that. I'll be trading as normal. Then, or whatever the Friday is before that, yeah, it's 20th, I think actually. And then I'll be shutting down for Christmas because of my father's 80th as well that weekend, and then that's on the 22nd, which is the Sunday. The 23rd is the day before the 24th, and then you're into Christmas, and I do all the sort of domestic stuff here anyway, like cooking and stuff. So I have a load of shopping and so on and so forth to do. So I'll just quit that, and then I'm not sure what day of the week the 27th is, but I'll certainly go back in and look.
Friday.
Um, yeah, I'll certainly go back in and look to see what's happening, and make my mind up then whether I would actually put a trade on. Um, so I would. Oh yeah, the only other interesting thing I was doing yesterday is because I knew I was a bit sick. I went from normal contracts in the ES to just MES, the micro contract. And I have to say, I think people are blessed these days to have the MES
Yeah,
contract
yeah,
for learning.
100%. 100%.
Yeah, it's 90% of them. Like basically there's a little bit of variance because I don't even use an MES chart. I just still trade the ES chart. Um, and it keeps your hand in. You're still trading. You're
Yep.
still there because I knew I couldn't handle the full position size yesterday. And you're still doing your job, but you're doing your job at a much reduced level. And I think that there's actually an awful lot more. I secretly think there's an awful lot more professional traders actually trade MES, or a lot of them trade MES rather than ES because they can add so well to it. I mean, the fees are higher. The liquidity is okay. The fees are higher, but you can do a lot of adding systems. You can adjust your risk more precisely to what you feel like. Um, so I think there are quite
Yeah.
a few professional MES traders now, but they're so
Yep.
lucky
No,
to
I'd,
have. Yeah.
agree. And I think we might have talked about this in one of the previous sessions and stuff about how certainly when I started in FX, it was just standard full on contracts. There were no
Mm,
minis, no micros, and I think
no.
it's an absolute blessing. All right, for traders, as you
Yeah.
say, can be a bit of variance. The execution might not be as good, but it's good enough. It's good enough,
Oh, yes.
and it
Easy.
allows you to get live
Yeah.
exposure without really sort of GBD right from day one. So yeah, I'm with you. That is an absolute godsend for new traders,
Mm.
absolute godsend, and I don't know. I don't know why new traders don't make as much use of that as they do. But anyway, that gets into it. That's a whole different. That's a bit different podcast on itself.
Yeah.
But
I
talking of
think it,
different podcasts, before we kick in, maybe we need to do a separate podcast on Ian's Christmas recipes and stuff. Maybe now that Greg Wallace has rightly been kicked off MasterChef and stuff, maybe you can step up and
yeah.
sort of you could fulfil that demand. All right,
I brought a
for a
Santa
middle
hat
there
just
we
to be on the
go,
safe
a
side.
middle aged fella in glasses to be in the kitchen, cooking up
Yeah.
and stuff. Maybe it could be
Yeah.
the new Keith Floyd. I remember him; he was fantastic.
He
He
was.
was
Glass of wine
absolutely
for him,
fantastic.
for the pot and the glass of wine for himself. He was absolutely
There we go.
phenomenal.
Yeah,
Yeah.
exactly.
Yeah.
Made for good for TV. There
Yeah.
you go. Oh, that's very good and stuff. It suits you. It suits you,
It's
Santi, doesn't
fantastic, isn't
it?
it? We have a whole selection of them here in the house. This one
I
is off
bet.
Santi suit. So it was down the last day for something else I was doing. So it's
Well,
yeah, part of
Mrs.
the job.
McFadden's a lovely, she's a very lucky woman, isn't she?
Absolutely. One always has a present in one's pocket. Uh, which will get me kicked off MasterChef. I think. Basically, to be honest, yeah. I felt very
And the
sorry for him in some way
shortest
because he probably
Master
could have,
Chef career.
yeah. Yeah. Because I think it's like that dancing thing, that there was, well, anyway, it's who cares really, but I think that there could have been a lot of misunderstandings there because I was reading about who was, anyway, I won't get into all that anyway. December, tax
Let's
selling.
go into that thing and stuff. I can't say I ever watched that dancing one and stuff, but there you go.
I
That's
don't own a
that's the
television. Yeah.
no. But anyway,
I've never,
maybe it's
yeah,
maybe our lack of focus on the subject topic is in itself an indication that people get a little demob happy
yeah,
in December, don't they? It's
yeah,
it's the end of the year. The weather for the most part, is pretty glum and stuff, etc., and what have you. People start getting a little bit demo happy and start switching towards their mindset, and folks start switching towards, Christmas or whatever particular way you wish to celebrate it and stuff. And so that demob happy, that lack of focus can, that in itself can cause a few challenges, can't it?
Oh yeah, no, definitely. I suppose the one thing we have to when you're talking about December, the Santa rally, apparently it's real. It's 1.3%, happens 76% of the time, and it's the week after Christmas.
Yeah.
I think an awful lot of the reason behind it is that there is nobody in the market to do anything. And the market, my own impression of markets is that they tend to drift very slowly up when there's nobody there to stop them. Because there tends to be more long-based buyers. They go and somebody buys a bit here, buys a bit there, and the price goes up. And if there's no counter transaction against it, like it's just prices will just rise a small bit. So it is a real thing. Apparently, it's a 76%
Yeah, it is.
chance
Yeah,
of happening, and I wouldn't be surprised where the ES now is at the moment. I'd be buying any pullbacks in the ES at the moment. That's would be my big focus today because it's over a previous high, and the best thing it could do for me is, although it made absolutely no hint of it this morning when I looked at it, but that's a few hours ago now. Any attack back on the previous high or close to it, a technical area close to it, is definitely looking at something to buy. Large funds won't be operating at the last end of the year. There's large funds won't be operating.
Yeah.
Everybody's going home, But they might have junior traders on who might push the market around a little bit, but there's no decision makers. There's no shot callers, to use the American thing, in the market at that stage, because they're the guys who run hedge funds. I always think just take a lot of time off. They're probably up in the Hamptons someplace doing stuff. They're not going to be sitting in front of their computers. Support and resistance still works, they don't abandon the rules completely, but in saying that, in low volume environments, it can be messy. Low volume environments tend to have a much messier technical side than high volume environments, because there's nobody there to keep them clean. Because if you have a mid-sized player who wants to get rid of a position, and he's selling it, it can push even more than he intends, can push price around more than he intends. So that he or she intends, you're going to have a unintended consequences of technical breaks, which are not real.
Yeah,
that's the big thing with the liquidity. And then there's tax selling as well, which I don't, which is, the Americans have a whole complex rule around tax selling. Depending on what the asset class is, I think in things like in crypto, you could just excuse me, sell your position and then buy straight back, and then you have that loss to write off. And in stocks, then I think you can't do that in stocks, and there's a huge thing, but apparently anyway there'll be a lot of tax selling and stuff, like, which I don't. There can only be a certain amount of it now at the moment, because the market is in this next week, because the market's too precarious where it is. Like, they could end up, if they broke the previous high and then held a pullback for down, it could turn into an all rout, like, which would be fine for the likes of me, like, but not so good for the tax.
I wouldn't know too much about the tax side. I don't think we can offer any real on that stuff. But in terms of reasons to close positions, some of that will depend upon institutions and funds and when they're either their fiscal year ends, but also, and most importantly for those traders and hedge funds, is when they are benchmarked. This might be necessarily the right word. Benchmarked in terms of how they are how they're defined in terms of whether they've under or overperformed, and actually what kind of how that can implicate in their personal part of their bonus. Normally, very often comes kind of like end of January time and stuff. So. So they have those implications at play in terms of that. Just to kind of row back on one of your kind of earlier points is that, you're right, is that once you're getting into these kind of like into that sort of, I'm just looking even here in my calendar and stuff. yeah, once that kind of week starting the 16th, there's not many people really very interested and what have you. And so any moves, yeah, as you say, we go into a low volatility environment. So what happens is you tend to get spikes because, as you pointed out, some guy, person, girl, institution puts on a position for whatever reason. Maybe they're just fulfilling an order for a client, or maybe they're just trying to look their book look good before the end of the year, before the end of the calendar year. And so you get a volatility spike, but then actually it drifts right back to where it started by the end of the day. It's just been a bit of a fake out. So trying to catch that, yeah, good luck with that. I'm not saying you can't, but to be sat around waiting to try and catch a volatility spike, I have better ways to spend my time. All right, and even if it is a volatility spike and you're trying to capture it, as if you're like if you've got retail execution, then are you really going to get kind of the fills and stuff that you particularly want? So, my view tends to be that basically, after that kind of 16th, sort of just literally drift away from it. I think also a break is good. Yes, you're absolutely right. Santa Rally is a thing, and it does occur, and people are now already starting talking about actually how it started early this year because of the nature of those US elections. Once again, if you're a stock trader and you want to be in that, fair play to you. I suppose the only thing I'd say is that if you're waiting for the Santa Rally to bail out your P&L because it's pretty miserable, then you've probably got bigger challenges to deal with than just waiting for the right stock on a Santa Rally. But I think the point, kind of my overall point, would be about it, namely, just because you might not necessarily be on the trigger, right? It might not necessarily be trigger time actually putting trades on. That does not mean that you can't still be working on your trading business. All right. There's still lots of work you can be doing on your actual trading business in terms of, as you alluded to yourself earlier, when second, making sure your admin's up to date, making sure your paperwork's up to date, making sure your spreadsheet's out of date. Because once that's all up to date, well, then you're in a position to start using the time to actually to step away maybe from trigger time and actually do a little bit of a review. All right, and actually we're going to talk about that next week. Is going to be the last TOGS podcast of this year, and it'll all be about a review of 2024, right? The good, the bad, and the ugly. And part of that is, as I said, doing the review, which is what you can be doing so that you're in a position to make better choices, better decisions about how you want to progress in 2025. So, I appreciate that if you're at home for a I don't know, week, 10 days, 2 weeks and stuff, and you're a bit fed up of being home and you're fed up of being stuffed with turkey and miserable relatives playing charades or what have you, and you might think that actually I'm going to just go and do a bit of intraday trading just because I'm bored. My suggestion is that perhaps you might want to reconsider that. All right, trading should never be used as a distraction from boredom or misery, because if you use it like that, it rarely ends well, does it, Ian?
No, not particularly. I don't like turkey either. I'm not a big turkey lover at all. I don't understand it. It's such a dry meat. I don't understand why people are so interested in it. And just rolling back to the thing with
Then
tax.
it means you need to have more gravy. That's what it is. And the gravy's good. Gravy's good for turkey. And a nice bit of cranberry sauce and a few pigs and blankets. Bosh, you're in there. And it means your parsnips and your carrots have got to be nice and sweet and tender. Spot on. All right. Sorry. Anyway, I interject. I'm just putting up a
I've done
defense
surf
of the
and
great
turf and things
turkey.
like that for Christmas Day. I find it much nicer. Like, it's nice to sit down to a big piece of steak. It's Christmas Day. Have a nice red wine.
Yeah,
Besides
you
some
can have
big.
that every day.
If turkey was that lovely, people would eat turkey, on Sundays, but they don't. They eat chicken
Oh,
because it tastes better.
chicken's nice today, but
Yeah,
I enjoy a good
yeah.
turkey Christmas dinner. All right, I'm putting in a. I am basically. I will die on that hill. But anyway,
Right.
each their
Fair
own.
enough. Tax, yeah, no, tax is one thing I always find is a big, huge problem. I pay a nice lady to do all that because
Yeah,
I have just walked myself into trouble with tax out in the past. One of the things I think that people have to understand as well about people who are like the heads of the fund managers that are, we say, our age,
yeah,
they're really highly paid. They're paid, in the hundreds of thousands per year, a lot of them, if they're up at the top. So if you are paid and you've been working for your whole career and you have all your financially secure, the thing is the next thing you want is time. Time becomes more precious as you run out of
yeah,
it. So that's why they're not going to be hanging around in a market. They're not that sort of 25-year-old, 30-year-old guy who's like really driven or whatever. They've done that. So they're not going to be hanging around making big decisions on Christmas Eve because they have to. The volatility spike, it depends on what type of volatility spike. If it's something like a penny stock where it just goes boop boop, then there's nothing you can do about that because there isn't the liquidity in that to do anything. I remember catching some scammer out one day when I was talking to him, where he's saying, I told my people to sell here and then the price touched there, and there was only like 30 shares traded at that price, which wouldn't have got him and all his mates out. Um, so I think it's decision speed really, because it depends on the technical bit of it. It depends if you're expecting it, and it depends on decision speed. And it's decision speed really that determines, in day trading, it's decision speed that really determines an awful lot of what you're doing, because
Yeah.
you have to be so aggressive and just press the button and hope for everything. You can catch them. I do catch them, but they have to happen in the right place. You have to kind of expect it to happen, and you have to have really quick decision speed, which basically means that when you're working on very low time frame charts, you can do, your risk isn't that great. If you're just using the previous high, which might be 2 points away, the previous high when you're entering, the previous high might be 2-3 points, so you can get away with that. The Santa rally also is probably can only be in a few stocks. It doesn't take, every stock isn't going to, they probably all go a little bit, but every stock isn't going to rally in at that time of year. So if you are caught in a bad position, if you're in a bad stock in a screaming market, your stock still mightn't go anywhere. So bad luck. It's that, yeah, the Santa rally is not going to, the probabilities of Santa rally is not going to help you all that much or get you out of a bad spot. So yeah, so that was basically it.
Yeah. I saw a video the other day and stuff and what have you. Some young some young fella on YouTube, sort of, trying to, he himself was about Jesus, he must have been about 23, 24, sort of instructing people how, they should ignore Thanksgiving, they should ignore Christmas, they should just grind on their hustle, forget being with family, forget going out with friends. They should just basically grind your way through Thanksgiving, grind your way all the way up to and through Christmas. It'll give you an edge next year and stuff. And I can't help. As soon as I watched the first thought into my head was that this guy's never kissed a girl, has he? He's
Yeah.
like, literally, he is Billy No Mates, sat at home with his spreadsheets, thinking that that is going to make him something important in the world and stuff and what have you. And I was just like, yes, you can work. Yes, there are opportunities. Yes, you do need to work away at your business, but there is also an element of perspective, as in there's lots of people who will watch this podcast and I work with and stuff. They are trading around their day job, right? They're trading around their day job. They've got enough going on as it is. Actually taking 10 days off at the end of the year to actually spend it with your family, to spend it with your kids, and actually just have a bit of a brain refresh might well do you much more benefit in the way you start next year, rather than thinking that you have to grind at your trading, okay, every minute of every day. Yeah, I get it. Okay, you do have to do some work, but there's an element of perspective that needs to be. It is a natural break. It's a natural holiday. If you've got young kids, you ain't getting that time back. You've got a young son yourself, isn't it? You want to be able to enjoy that time with it, because they grow up. They grow up so fast, so quick. So there is a line to walk between the hustle and then doing literally nothing, and that will be determined by each individual's circumstances, commitments, responsibilities. But you want that kind of Christmas period to be an enjoyable one, all right, not a miserable, stressful one. And if you've just done your arse on some crap trading as well, that's not going to help you in any way, shape, or
No.
form, is it?
No, not at all. I was just thinking about that. An awful lot of the sort of modern advice for young fellas is all about the grind, and I always think as well that the grind doesn't actually, working hard gets you nothing. It's working smart that gets you everything really at the end of the day, and that's what they never say. I mean, a guy who working a mid-level manager at McDonald's works a hard job, and he could work 80 hours a week if he wants to work at his 80-hour a
Yeah.
week. But it's not smart work, as in he's not creating
No,
money for himself. And it's at the end of it, it's not, with trading, it's not it's not necessarily just hard work. It's epiphanies along the way that really make the big difference. So it's understanding, risk management, when it really clicks in your head and you go, oh, okay, I get that. I understand what risk management it is. It is, I was even last night, I woke up in the middle of the night and I just had this big epiphany about how much I was doing to control my own cortisol, basically, when I was doing what I was doing things to manage my own emotions, which instead of what I should actually be doing, which was managing the chart. And I was, woke up this morning all cheery, even though I was sick as a dog, going, I just had a bit of an epiphany. And I think that that's much more, you do have to do a certain amount of work with trading. You absolutely do, to learn the basic skills and to learn the whatever it is. And how hard you work at that may determine how fast you learn those things, like how to draw a trend line or how to draw Fibonacci or what's an RSI or all that kind of stuff. But it's the epiphanies and how fast that you can get through those epiphanies. And it is not hard work that will do that for you. It's your intelligence, it's luck, it's who you're talking to. You'd be better off, you could work your backside off, but then you could meet, a professional trader, if you were really social, we'll say, and they could give you a helping hand for 2 hours and then save you 6 months work. There's working smart, I think, and there's
100%.
Yeah, and then an awful lot of these guys as well, with an awful lot of the sort of modern advice to young fellas, which is that build, and about kissing a girl, build and then date. Why? What are you waiting for? There isn't. I mean, you're 50. Those 24-year-old girls are not going. They're not going to be looking at you in the same way as they're looking at you. They mightn't be looking at you then either. But it doesn't. And then they equate. The stupid thing is they equate money and wealth with being attractive, and it is a help, but it's not actually, I don't think, the main component of attractiveness, because you get all these sort of, the one guy you can think of as a MMA fighter who worked in a bad job, had no money, but he was still had girlfriends because he was very charismatic or whatever. So making money, and the thing is that those guys, if they don't develop some sort of life skill, they're just going to end up being picked off by
gold diggers.
Eventually, that's what's going to happen.
Yeah, I agree. But maybe this should be our other podcast here. Good uncle, bad uncle. Dishing out advice. But anyway, if there's demand for that, we'll as traders will fulfill it and stuff.
Well, it used to be my nickname. It was genuinely my nickname at home in Westport was Uncle Ian.
Uncle. Yeah. Well, a mate of mine just retired from the Air Force, and his final job in his Air Force was on it. He's the squadron uncle. They brought it back, having squadron uncles, like the old guy who sits in the corner, who's seen it all, done it all, been through it all, and basically sort of tempers the ego and the enthusiasm of the young kids and stuff, and actually dishes out, solid advice. And if you're a good kid, you listen to what those guys are, you take it on board and stuff, because they've been through it all, seen it all, done it all, made all the mistakes, had all the successes and stuff. And you might be saying that in some ways that's a little bit of an underpinning kind of reason for even this podcast is having we've pretty much seen it all, done it all, haven't we? We've made all the mistakes, all right, okay, and we've seen people have those epiphanies, like you had yourself, but also helping people have them, and it's all part of life's rich tapestry, isn't it, Ian?
It is indeed, but it's a huge big thing, I think, and I think it's a big problem with young guys going into the whole thing, because they're not getting a version of masculinity from their parents, or from their father, I should say. Actually, really, a lot of them, they're getting it from the internet and YouTube channels full of the opinions of guys who are 20, 30, we'd say, because there's an awful lot, you see all these podcasts with guys who are 30 years old, and I think that an awful lot of those podcasts they're from a certain perspective, but they're from the perspective of a 30-year-old, and I always think that they're too, because a lot of the stuff they're talking about that's important to them, doesn't matter shit when you're 50. You're better off do some exercise and eat properly or whatever. Go out, meet girls. Yeah.
get a life and stuff.
Yeah.
Yeah. But
Yeah.
anyway, as I said, I think that's a whole different. I think that's a whole different
Yeah. Yeah.
podcast.
I
There's
just think
a,
it's trading in December as a topic is quite thin, really, to be quite honest with you, because it's
that's
trade
not
for 3 weeks, take the other week off.
but it's about the I started to get interested in it years back when I read God Almighty, it's many years now. What's his name? Oh, John Carter. John Carter. I read his book.
Oh
Very
yeah,
good
yeah,
book. Good trading book. Read it. Okay. I mean, it's quite old now. I think it's probably about maybe 10, 15 years on it, but still it's solid. But I
yeah.
picked up a piece on in the back of it. There was a trading plan bit, and this was many years ago. When I was kind of on the path myself. And one of his rules was that if he was 60% up in his accounts by the end of November, start of December, he took the whole of December off. That was basically
Mm,
one of his particular rules. And it got me thinking about, well, okay, I could understand that because August can be a bit thin, but also December can be a bit miserable as well. All right. You don't know now. This year, of course, we are working towards the inauguration of Trump in Jan. So that has an opportunity to
yeah.
to to provide a little bit of a little bit of sparkle to the markets. But generally, they can actually be they can be a bit dull, okay, a bit lifeless, and also when they do move, as I said earlier, it's a little bit of a volatility spike, and it's like whack-a-mole. All right, you're trying to play whack-a-mole to sort of capture that, as you say. If you know where it is and when it's coming, great, but most people don't. So why don't you just enjoy the end of the year? All right, just enjoy the end of the year, get all your paperwork in order, sit down, do a proper thorough review, like a basically a stock check of your business. And I do a little exercise for this for people, is that in most businesses you have stock, whereas in trading it's your IP. All right, it's your IP is your stock, and so you should basically be doing a stock check at the end of each year to understand and work out, right. Well, what have I learned? All right, what have I built this year in terms of that I've learned in my experience and knowledge, and also what am I still short on? What am I missing? Or what do I actually need to work on? Because that then becomes the start of your goals and objectives for Q1 for 2025 and stuff. So I think there was plenty to talk about, but I appreciate if you're just talking about trading setups in December, it is enormously thin. All right, certainly in the work, the kind of markets I look at. But as I said, you can still be working on your trading business. All right, even if you're not at trigger time. Those who know me know I'm always banging on about that. You're always working on your trading business.
Mm. I remember I've that John Carter book as well, whatever the name of it is.
Mastering the trade or something, is
Something like
it?
that. Yeah,
I
yeah,
could be wrong, but anyway, listen,
yeah.
it's a good book. It's a good book, and I've met the
Yeah,
guy a couple of times years ago. Nice guy.
yeah. He's it's the sort of thing I'd recommend. Like rather than take it that seriously, I'd recommend it if you're going someplace in a long train journey.
Yeah.
It's a good book for that type of stuff, and the stuff that's in it. Like I mean, one of his setups is a 233 tick in the ES with a
Mm-hmm.
SMA, and
Mm-hmm.
that's not happening anymore. Like
Yeah. Yeah.
it's not gonna you're not gonna be doing much with an SMA crossing the 233 tick. It's
No.
it's too quick. Um, I think a lot of people as well panic, especially the reason they won't take time off, and I know this from my own self as well, is that the idea of taking time off in when you're doing something which is a massively important project to yourself, like trading, causes a certain degree of panic in the person, and then they have a certain amount of FOMO, and that causes them to overwork, to a certain
Yeah.
extent. And the thing is that there's no point in, like one of the things with trading as well, is it's very easy to go in circles. You go back into doing your trading, and I mean, I do it. I think everybody does it. You go back into doing your trading, and especially if you get anything that even slightly works, you are or you think it works. Because an awful lot of particularly sim traders and newer traders, because they're doing something on a sim account, assume that it's going to work on the live account, or because it's almost working. It's like, oh, I'm profitable for 2 weeks or 3 weeks, and then I have 1 week of down, and therefore I must be nearly there. But you're not, and I think that it can bring a certain degree of panic, and that's why a lot of people will overwork that at the last week of December, like for instance, where you could be doing something else. I think that's what they do. There's a certain, and then I think as well when you work at it professionally, because I mean, because I was talking to somebody when I was sitting at a karate class the last day, and I was talking to somebody about it, and I was just thinking, I was trying to explain, well, I work from home. I'm always at work. You're always, to a certain extent, you're always at it. You do end up using it not so much as a source of entertainment, but it is, your safe space. And to a certain extent when you work from home, because you can go to your office, you close your door and tell everybody to leave you alone, which doesn't really work, like, but you can try it, see how it goes. And it's but I find sometimes like my son will just march into the rooms and sit on my lap or something when I'm in the middle of losing money or something like that. It's a what are you doing? I'm working. So I find that quite a little thing, but time off, it's a very important thing to take time off because you as well are your edge, at the end of the
Yep,
day. And if you're just
totally.
tired and stressed out,
Bang.
then you have
Bang on.
degraded your edge, and
Yep.
that's not something that's really that possible. Like, I mean, I have no edge today. If I go up to the market, I'm tired, I feel sick, I don't feel like doing anything really at all. I'm gonna go to bed as soon as we finish up this. And that's because I have no edge.
Yeah,
Even my
exactly.
technical, even the I have a couple of setups that are like basically have a technical edge, but as far as I'm concerned, um, I don't have an edge, so I can't trade because I'm just not in the right place mentally to do it
Yep.
at
Yes.
all.
Agreed.
Unfortunately,
Yep,
that's
agreed. You are your edge and stuff. So why would you try and employ it when it's dull, when it's degraded and stuff and what have you?
yeah,
We are not in the we are not in the industrial age. You're not in a trench under Somme, all right, just literally slogging it out in the misery and the guts and the mud. Right. We are in a fortunate position to be able to choose as and when we want to engage. And if you're not in a good place, why would you continue to do that? All right, okay. You're a private trader. One of your few edges is the fact that you don't have to trade. All right. So you don't actually have to trade. You can actually trade when you're at a good place. There's a lot more to that in itself. Talking about motivation and drives and stuff and whatever. There's that itself, but you're a trader. You're always looking for your edge, and one of your edges is that you can trade when you're in a good place. So if you're not in a good place, why would you force that on you? Because there's nothing worse. There's nothing worse than taking crappy trades and losing money and knowing in the debrief I should never have traded today because I was never there. Not I was never there from moment one from moment one of the session and stuff. It's just a stick to beat yourself with. Why would you do that? What's
yeah.
the? I don't see the point in that. All right, don't see the point in it at all.
I was just thinking, just like the Psalm, I get to play with football with the Germans on Christmas Day.
That's very
Yeah.
true. Yeah,
You're using when you're trading when you're under the weather, you're using up emotional capital, and that can be just as important as your
yeah,
trading capital. Because the thing is
exactly.
that you have that memory. Because every time you lose money, you get a little scar inside someplace. I think
Yeah,
there's a certain point when you're happy and you're trading away and you have a normal loss, and then that's nothing. But the thing is that when you sit there in the back of your head, like if I was sitting up there now today and I lost $500 or something like that, or $1,000, I would, I know I should not have been there. I have now told myself I cannot trust myself to stay away from to stay away from
true.
something that's not good for me.
Boom.
So it's going to create a scar inside of myself that the next time I'll be slower, and that slows me down. And as a day trader, the worst thing you can be is slow or slowed down, because slowing down negates all edges in day trading. If you are
Yeah,
slow, you're late to the show. If you are slow, you're late getting in, you're late getting out. You don't take profit in the right place.
yeah,
It's over. All edges in day trading include speed of decision. The other thing I
yeah,
was going to say is that people tend to think it's an exchange. When they get mixed up with the whole thing, is that they think that it's a money for time exchange, because you have all these people who are working in some office, and they turn up at a meetup thing or something, and then they have this idea that if they put in X amount of time, you're going to get X amount of money out of it, and it's not a time for money exchange, because the market decides what you're going to get. I could go
yeah,
in and tomorrow now and buy, some drug company that comes out that accidentally then announces in the afternoon that they have to come up with a cure for everything.
Yeah.
They will make you young and attractive again and take all your pain away. Drug that you take once a week or something. And they could just shoot up to the stars, and that's just unfairness. That's just the way it is. It's not a time for money exchange. It's a time for it's it's being smart. It's being in the right place at the right time. And all that a trading setup does, or all that anything that does for you, is put you in a high probability area for certain results to happen. But if that result, the positive result, happens, you can never know if it's going to go all the way and make you like a significant amount of money, or just go and then run out of steam. The only thing you know is that you can put a stop on your loss. But the market decides how much you're going to get paid. So it's not a time for money thing. Like when I sit there it's the last thing I just want to say about an awful lot of day traders I come across, like, especially these guys that have like, I need to make $1,000 a day and then I'm a happy man. And they go in and they make their $1,000. They make their $1,000, and it's a high volatility day. It's a technical high volatility day. They make their money and then they quit. They've hit their target for the day. But it's when you hit days like that, you just have to sit there and earn. There's no, because you're going to then maybe have 3 weeks of low volatility days, which are untechnical, and you're not going to earn anything. So
Yeah.
it's like fishing. The fish start running, and you need to be there to catch the fish, and that is the end of my podcast rant at the moment.
Do
Oh,
you
it's
feel
great.
better for that, Ian?
Sorry.
Do you feel better for that?
No, I feel terrible actually all day. And I was like,
Well,
oh,
let's let's let's
yeah. I think I'd
let's
be head down on the table now at this stage if I hadn't taken a lot of German drugs. So it'll
well,
be.
there you go. God bless
I hope I
German
took the right
drugs.
ones or something, and I didn't take.
Yeah, I hope you've got the right ones as well and stuff.
Well, it
So,
said
but
there was a.
let's.
Yeah,
I'm going to try and
yeah.
avoid any cheap jokes and stuff about that. But anyway, let's listen. Let's draw that to a close and stuff.
Okay.
You've done well to basically to get through it as it is and stuff
Yeah,
with your flu-like symptoms and husky voice. There you go.
yeah,
I'm sure there'll be people who'll have appreciated the huskiness of the tone of your voice
yeah,
there, Ian,
yeah.
and
I
stuff.
wish you'd
It's
say like that all the time. Actually, it'd be
yeah, well, maybe we'll
nice.
see.
Yeah,
Maybe we'll see what the feedback's like. All
yeah,
right. So, ladies and gentlemen, so as we said, trading in December, it is right. Listen, it's a personal choice ultimately, and hopefully, we have given some ideas that there is only really the right way forward for you. All right. Some people do well trading through December. Other people, it's not the smart move. Right. My view should be that once you're into those last 2 weeks of December, especially if you're young families, enjoy the time with your family. All right, actually make it a good time for your family, which will make happy memories. The markets will still be here. All right, come January 2025. All right, so but actually having that Christmas with your kids might you won't get that back. So those are my particular views on that in terms of it. But anyway, next week is our final one of 2024. Okay, that'll be TOGS 35. Okay, and we're going to talk about a review of 2024, the good, the bad, and the ugly. So that's what we'll be talking. We'll be sharing some of our own ideas, but it would be fantastic for those of you listening to the podcast. Please feel free just to email or ping us in. All right, any particular thoughts you might have, what has been the good, the bad, and the ugly of your own trading year. Would gladly happily chat about that. Okay, I think it's everybody will have had good, bad, ugly elements to this year. But we always love the kind of interaction and the feedback. Until that time, all right. Have a great trading week. Enjoy your December, however you choose to spend it, and we'll see you next week. Thanks very much, everybody. Cheers.
Bye.